Good afternoon, I'm Jeannie Yerman with TheStreet, and I am standing here with Greg Keating of James E. Coffee Securities. Good afternoon.
Good afternoon, good to be here.
Well, today, markets are up yet again. We had the University of Michigan Sentiment Survey. It was the highest in 6 years and the biggest beat in all its history. What do you make of it?
Well, market's right back on track, right? I mean, yesterday it seemed the most important part of yesterday was that it showed that the market can go down. We've seen of the last 20 trading sessions, only 4 have been lower. So right back, positive economic data, like you mentioned, the Michigan survey, and also leading indicators that we came out right around the same time. Also a positive beat there. So the market, the momentum is definitely on the plus side of the market, and continues to be.
Well, and it seems that what got the market down yesterday, those comments by Federal Reserve Bank President Williams talking about ending the bond buying program, that's been totally overshadowed. But what were your clients saying on the heels of that, and are they still talking about it?
Well, I think yesterday, as the market was trading lower, I think everyone was kind of looking for a reason why. They pointed to that speech, but if you take a step back and look at it, he basically had the same comments in early April. So I think that was just a little bit of profit taking, searching for an excuse why the market was a little bit lower. And we see today positive economic data. The market's right back to where it used to be.
Well, and speaking of profit taking, it seems that, let me back up for a second. We've got the Dow up 16% this year. S&P 500 price to earnings are over 14 right now. And the markets keep going up, and that's despite an earnings season that was pretty lackluster. Do you feel like your customers are getting a little bit more anxious?
I think so. I mean, I think at some point, right? I mean, you mentioned the earnings. We're coming to a close of the first quarter earnings here. Earnings are good, but you look at the growth revenue. There's not much there. Now, there is a kind of belief that later in the year we're going to be, the growth prospects are going to be higher. But at what point? We look at the market, like you mentioned. If we had this conversation in December and you said the S&P was up over 15%, Dow 16%, you'd say, wow, what a great year. We're not even halfway through. What's important now, can we get a bit of a transition? We've seen the leaders of the market be defensive-oriented stocks, defensive-oriented sectors, I should say, healthcare, utilities, and things like that. Can we get a bit of a transition? Can the cyclicals, kind of take over from here? And that remains to be seen, and hopefully, the economy can continue to grow, or at least show signs of more growth, and everything will kind of fix itself out. And the market, where you feel like it's getting a little bit ahead of itself, now with continued growth, maybe that can kind of justify this movement so far.
And then just really quickly, it is Friday. What are you looking for next week? What are some data points you're looking for?
Well, I think the biggest thing, on everybody's mind is Ben Bernanke's testimony in front of Congress next Wednesday. The Fed speak is obviously can move the market in many ways. And in particular, how early are they planning on, everybody can kind of, try to guess when do they start reining in their bond purchasing. So I think that the market's really going to be keying in on his comments next Wednesday.
Okay, we'll leave it there. I'm Jeannie Yerman for TheStreet. That was Greg Keating of James E. Coffee Securities. Have a great weekend.